This is Mark Anthony with Mercury Time Price Analytics with our end of day video for day trading and swing trading, S&P futures, NQ futures, SPY, QQQ, Apple, Microsoft, and other assorted large cap tech. I'm going to show you some things on tonight's video that we normally don't show on the videos, things that are for our subscribers. This NQ chart, and by the way, we have a day trading algorithm and a swing trading algorithm. I'm going to come back to this chart in just a minute, but I want to just lay out some of the pieces of what we're seeing, because when you see this type of roller coaster, and this is not a day trade chart, this is a longer term swing trading chart. And by swing trading, you know, sometimes a swing trade is one day. I mean, if you get in on a swing trade that moves a couple hundred handles in NQ, you might choose to book profits right then and there. But typically swing trading, you're talking about multi-days, sometimes multi-weeks. But we're going to come back to this in just a minute. So we'll start with this screenshot right here. And if you haven't seen any of our videos before, we show you these algorithmic levels, these vertical lines on the screen. But when you have this kind of crazy up and down movement, sometimes it's difficult to know when to pull the trigger, when to get long, when to get short. We provide an automated algorithm that takes the guesswork out of it. These levels that we provide to our members, and we've got two sets. We've got a set that we publish at night with these Mercury band levels, and we've got a shorter term set of algorithmic pivots, vertical lines that we post in the morning. But these are just guideposts. So when you get in a trade, you can more easily manage the trade and take incremental profits and not give your profit back. But what I wanted to show you on this chart, we've got a couple different dynamics here. These vertical lines, the horizontal lines are Mercury bands. We've also got an X5 pivot right here, which is a key institutional level. Mercury bands here, 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 and here. The tan angled lines are algorithmic regression lines. It's the only thing you see on our chart that is an angled vector like that. When you get these horizontal algorithmic pivots of the Mercury bands, and where there are spots where you get the confluence, the intersection of one of the Mercury bands and an algo regression line, those levels provide very, very powerful support and resistance. And what we've seen now 2 days in a row, mirror image. Here's this is the S&P 500 futures contract. Tuesday, the high came at the confluence of a Mercury band, the horizontal pivot, and the regression line. So you had a little overshoot. And what's cool about these regression lines is price will fight over these back and forth, and then it releases. And you don't know whether it's going to release higher or lower, so you're not going to be short when it goes above this tan line right here. But when you see it break, especially in the case where you see it fail, and that failure right here, when it comes at the confluence of a Mercury band and a regression line, that's powerful stuff. Today you had the opposite. Here we had resistance at the confluence. Here we had support. Different Mercury band, but same concept. Fixed horizontal algorithmic pivot, confluence with an angled vector regression line. That was the day's low. Now, this is the same futures contract. Is that the one I wanted to show you next? No, it's this one, I'm sorry. So we were just looking at the horizontal fixed pivots. Here we've got our algorithmic oscillators, and they're color-coded for a reason. This purple dashed oscillator, this is the fastest one on the chart, and if you like to do a lot of in and out trading, this is the one that you use. Long above, short below, easy peasy. What's interesting about this particular chart, the white ones are sort of your intermediate term day trading charts. So when you get breaks of these white oscillators, then you'll tend to get bigger moves. Now, this purple one's the fastest one, and then you get to a little bit longer cycle, which means they move more slowly. So the next one up in terms of a little bit longer length is this dashed white one, then the solid white one, and then the dotted white one. So of the 3 white oscillators, this is the fastest, this is the slowest, this is the tweener, okay? Now, the reason I'm showing you this chart is the orange oscillators, and we keep this consistent across all the charts that you see when you're logged into our live chart each day. Our system, there is no software to buy or download. We run the whole thing live on Zoom. So you use your email address, you get a free Zoom account, and you see these things moving in real time each day with no software to download or buy. But what's interesting is that the orange oscillators are the trend oscillators. And we saw support come in at the same orange trend oscillator that provided support twice on Monday and again today. So if you were up trading at a little after 4 a.m., I was actually up at that time. I'm on East Coast time, so it was pretty early. If you're getting up at that time at 4 Eastern time and you're on West Coast, God bless you. That's tough, 1 a.m. But if you were short and you saw price break through this line and this line and this line, well, eventually you had to be out of the trade once it came back above this oscillator. And that's what's cool about these things, is they allow you to manage the trade because price will move from line to line to line to line to line. And when it starts recovering them, sometimes it's going to come up and fail. But once you see price acceptance above the oscillator, above where it found support, then you got to be out. Now, the other thing that's cool about these oscillators is you look at the apex and the crest of them. So, for example, you've got this really fast one, comes down, comes up a little bit. Once it goes through the crest of this little wave right here, you're short. Comes down, and so if you're in a high frequency trader, so then we'll go to the next progression. You come down here, you hit a little trough, come up here, you hit an apex. So where is the next short? If you were to draw a line right under this trough, take this over, boom, you're short again. And it's very, very simple to use. And so whether you're a short-term trader, an intermediate-term trader, or a swing trader, you can use these any way you want. There's no right or wrong way to use it. The other reason I wanted to show you this chart is when the market gets to really important inflection points, you'll start seeing different time cycle regression lines start to converge. If we were looking at this chart a month, 2 months ago, 3 months ago, you wouldn't see the blue long cycle regression lines and the tan ones. And of these tan ones, we've got a short cycle regression line, and we've got an intermediate cycle, the solid one. Well, here we've got 2 very important long cycle regression lines, and this one is the big kahuna. This thing goes back many, many moons. You'd be blown away if I told you how long this thing goes back, where price would fight over and over and over. But understand that these angled lines, when you get to the main ones, the long cycle, you got a lot of chips riding on these things. So the market is at a very, very important inflection point. It could go higher, it could go lower, but the market has some very important decisions to make over the coming days and weeks. And I'll show you an example of that importance on the NQ live shot that we showed you in the beginning. So how do you tie all this together? If you're looking at, as an example, what you see on this chart, these are the morning pivots that we put out. Now, the most important one is this daily bull bear pivot. I mean, that one is real simple. You're long above, short below. Or to give you more flexibility, because trading isn't as binary as that, you're either long or flat above, and you're either short or flat below. Okay, real simple. Until it comes into an oscillator, some type of support level, like we saw here. And if you're the kind of trader who likes to sell the rips and buy the dips, you can do that too. But when you look at these, a chart like this where it's simply pivot after pivot after pivot, well, there's a lot of decisions to make there. We have an automated algorithm, and it is super, super simple. Let me give you a shot of that. Let's see, is this one? Yep. All right. So here's your S&P 500. This is the day trading algorithm for the S&P 500. It's real simple. Right here is your sell. Here's your buy. The cyan line is the momentum algo. And the way this works is simple. On each bar, there are two little white dashes. Those are our proprietary volatility algorithm. And there's two things that trigger this. It takes two things to trigger a long or a short entry. The first thing is you have to have a change in the directional slope of the momentum algo. Now, there's only three things that would quantify as a change in the directional slope. Either you have a formation that looks like an inverted U, a formation that looks like a regular U, or you have spots where basically it's going sideways and then like a fork in the road. The cyan momentum algo either forks up or forks down. But it takes a change in the directional slope. So here's a good example right here. The slope of the momentum algo is up, and then it peaks. Now, you don't do anything yet, because you don't know whether this thing's going to just go down a tad and find support and go right back up. So all the change in directional slope of the momentum algo does is it simply puts the system into the ready state. So when you're watching this, you see that slope. Now you're on the alert that you may be getting a short signal here. Well, what always happens before you get a flip from long to short or short to long, these volatility dashes will start to contract. Notice how when you had the crossover up and through, as price is escalating, and again, there's two of these little white dashes on each bar. Notice how they're widely spaced apart, and then they slowly start to converge together. And here they get even closer together. And right here, they're completely meshed as one. Once you have step one that puts it in the ready state, directional change, slope goes from up to down. The actual entry trigger is when these little white volatility dashes roll over, compress, and then cross through. So right there's your entry. Now, why does this work so well? And I will literally put this up against any algorithm, professional or commercial, anywhere in the world. We've had this thing tested, a 30-year back test. I had a CTA with over 35 years experience test this. And this man has tested literally thousands of systems. He has never had a system that tested as well or as consistently profitable as this. Here's why. Here's the secret sauce. When you first get in a trade, primarily you need two things to book a nice trade. I'm not talking about a scalp. I'm talking about a nice, juicy directional movement. You need two things. You need to be right on the direction of momentum, and ideally you need to get into that trade at the time when volatility is compressed. And then you want that volatility to release in the same direction as momentum has just recently turned. Now, when I talk about volatility, I'm not talking about the VIX. See, the thing that people misunderstand about volatility is the most important part of volatility is the second derivative. And what I mean by that is it's not volatility in general, it's volatility compared to itself, meaning what is the volatility right now, for example, at this point in time, compared to what it was half an hour or an hour ago. That's what's important. When in this area right here, it doesn't matter whether the VIX was 20, 23, 24, 28, 192, it doesn't matter. What matters is at this particular point in time, right here, where these two little white dashes are meshed, the volatility is more compressed than it had been since right here where the long trigger happened. So again, it doesn't matter whether the VIX at this point in time where the long trigger or this point in time where it got short, it doesn't matter what the VIX is. All that matters is that volatility expanded and now it's really compressed, and it got really compressed right after you had a change in the momentum algo. Simple as that. So, you know, we give you all these different metrics, but you don't have to sit here scratching your head wondering what do I pay attention to right now? The chart tells you what to do. And just like you can use the different waves of the oscillators, again, you've got this slope up, it comes down, it starts to rise again, and then the trough of that little slope is right here. That's your spot to get short. Comes down, comes up again, you get short again at that trough. And same thing in the other direction. Where's a good example? Right here. The purple line comes up, starts to come down, right above that apex right here, that little purple point, you're long. Now, if you'd gotten long right there, where are you going to start worrying that the trade might have run its course? When price comes into this regression line. Now, just because price comes up into a regression line doesn't mean it's going to reverse. As I mentioned earlier, price fights over these regression lines, and once it gets entangled, engaged with a regression line, you don't know how long it's going to fight over it, but at some point it's going to release, either higher or lower. Here you had the release higher, here you had the release lower. Came down, and then sometimes you get, you know, more binary moves. And that's why when you get in a trade, once you get about 3 handles to the positive, move your stop to even. Don't let your stop get taken out and have a gain turn into a loss and then sit there hoping that you get some magic reversal. That doesn't happen that often in this market. There's such low liquidity that breakouts tend to run. I mean, look at it this way. Perfect example. You had a move from down here, was it below 3,200, up here to 3,230 in a very short time. And it starts to consolidate. You know, you don't know. Let's say you got short right here. Okay, so that's, let's call it 5 handles. Once you're 3 or 4 handles at the most to the good, you have to, and I recommend taking some profit at 3 or 4 handles. But let's say you didn't take any profit, you shorted it here, it comes down 5 handles. You have to put your stop at break even, because you can't sit there and think, well, it just had this big run. And you get short here and you got 5 handles and you're thinking, yeah, baby, this one's going to reverse. And then it comes up here and takes out your entry point. What are you going to do? Sit there and hope here or here or here that the thing reverses? Well, if you were short here at 32.34, you're still up here at 32.50 hoping this thing's going to reverse. And guess what? Even if it does, you need a 20 handle reversal lower just to get out at even. So in this tape, you have to protect your profits. Whether you're playing it long, you're playing it short, you have to protect your profits. Now, I just want to show you a couple more things, and then we've got a coupon code. If you've been watching our videos, we've got a coupon code for you that'll save you some money if you'd like to try out our service. So let's go to our last chart, which is, is it the live chart we got here? Okay, yeah, this is live right now. You've got NQ trading 10,813. Now, this is not healthy action here. We had this massive move on Monday. We had a really deep pullback on Tuesday. Can this still go higher and make a new high? Of course it can. But this kind of nonsense in 2 days, this is not healthy behavior. But you can't look at this and say, okay, here's the roller coaster, and we're just going to get a bunch of these little waves lower, and then we're going to get another big swoop down, right? Most roller coasters have at least 2 big drops. Well, that didn't mean anything to the market. Who cares? I mean, neither you nor I can explain what in heaven's name caused this nonsense on Monday. Who's to say it doesn't happen again? I mean, when I saw this, and again, this is NQ, so you've got high-tech stocks like Apple, Microsoft, Facebook, Amazon, Google, Netflix that drive it. But the biggest of those is Apple. And, my comment at the end of the day Monday that I posted on Twitter, evidently someone at the Fed really digs their Apple TV. Now, of course, I'm saying that in jest. We don't know what caused this. Maybe one of the big institutions decided they were going to run a massive program all day long. So you don't know what the reasons are. And frankly, it doesn't matter. The only thing that matters is price. So you can't get locked into a trade and then have it do one of these. I mean, imagine if you got short here. I mean, that would have been a pretty nice trade, right? If you got short at 10,658 and it comes down to 10,552, it's a 130 handle move. Well, you can't be fighting price here and here and here and here and here and here all the way up. It's like the people that are still short Tesla from $800. What kind of move do you need? If you're short Tesla from 800, and I don't trade Tesla, I could care less. If you have a Tesla, and God bless you, I don't care. I'm not talking about the car, I'm talking about the stock. I could care less what Tesla's stock price does. Don't care. Don't look at it. Doesn't matter to me. But here's the point. There's people who were short Tesla from $800. I guarantee you they are still short. Well, it's what, $1,600 now? So now you need a 50% move to get out at even? You can't fight price. Don't try. But this is our swing trade chart. And as I put out on Twitter on Tuesday night, early in Globex, price was about here. And I posted a chart on Twitter, and I said, this is the level to watch, this XSV3 algo pivot, which goes back to 713, and the price level is 10,983. That was the level to watch. Well, once that broke, it hasn't even sniffed that level again. And here's our handy-dandy momentum algo. The momentum algo works just like it does on the day trade chart. This is a swing trade algo, but look what happened every time it came up into this. Splat. Now, here you had another move up, but when it lost the momentum line again, from that point there, 10,889 down to 10,781, you had 110 handles. And then it came up again, so you're not, if you're short, you're not hanging through this whole thing. But once this line is, again, the trend of the momentum is down. So every time it comes down here and breaks, if you're an NQ trader, you can be short again right there. Now, when price comes into this purple line here on the swing trade chart, sometimes you'll get really nasty short squeezes. So, this thing could go right up. There's a lot of Fed liquidity coming on Friday. That doesn't mean stocks have to go up either, but you just have to be nimble in this market. So we showed you a couple things that we normally don't get into on these videos. We tend to like to keep the secret sauce for our subscribers. Our website is mercurysignals.com. And I mentioned this at the end of every video. Just about every decent trading service bills you monthly. We're the only one I know that bills biweekly. And I don't know how much longer we're going to do it, but we honor our commitments. So if you join under our bi-weekly billing cycle, we will never move you to monthly. You get to keep whatever you sign up for. So we only bill you every 2 weeks. There's no contracts. You can cancel anytime. There's no software to download. There's no software to buy. And even though we give you the convenience of biweekly billing, in other words, we're not locking you in a month at a time, we still give you a lifetime rate lock. So whatever your biweekly rate is when you join, it will never go up. Now we've got a coupon code for you, and this was a coupon code that you can use that will take $40 off your first bill. That's not $40 off every biweekly bill. It's $40 off your first bill. You go to mercurysignals.com, click subscription. The coupon's already loaded. And so when you click on subscriptions and you get to the subscription page, when it takes you to the checkout page, bottom left-hand corner of the checkout page, it's real simple. Put this coupon code 40, no spaces. So when you get to the checkout page, the page where it asks you for your information so you can access our services, put coupon code 40 in the bottom left-hand corner. Your first bill is a whopping $88. Okay? And there is no software to buy, no contracts, cancel at any time. So if this sort of information is intriguing to you, and if you're a trader, I don't know how it cannot be intriguing. $88 gets you into our program, 2 weeks, check out what you like, or check out everything that we offer. Stay if you like. If you don't, well, thank you for your time, and we're happy to help you with anything that we can. So once again, as always, we thank you for your time. This video is running 26 minutes, a lot longer than I anticipated. But I'm up since 4 a.m. this morning, so I'm kind of running on fumes. As always, we thank you so much. And let me just share something very important with you. This is a very important time for our country. Everyone around the world, just about everybody's going through some type of difficulty, and I don't need to name all the reasons. You know what they are. Geopolitical issues, financial issues, coronavirus issues. If God is not part of your life, I'm 57 years old, or 58. I'm one of those, whatever. If God is not part of your life, I don't know how you get through the kind of crap that's going on right now. So whether you ever check out our trading service or not is not nearly important as about what I'm about to share with you. It doesn't cost you a dime to invite God into your life, and He will change your life. He will change your family's life. He will change generations of your children's lives. If you'd like to correspond with me, it's real simple. Mark Anthony, MarkAnthony, Mark Anthony at mercurysignals.com. Just like it says here, just put Mark Anthony at mercurysignals.com. It'll get to me. And, I talk about faith quite a bit on these videos. And if you're not interested in our service, but you would just like to talk about that, send me an email, Mark Anthony at mercurysignals.com. As always, we thank you so much for your time. God bless you. God bless your family. And we hope to see you again soon.